Money order. A money order is a financial instrument used to make a payment to a specified recipient. It is a prepaid, secure form of payment that functions as an alternative to cash, personal checks, or credit/debit cards. Money orders are often used for transactions where the payer and payee do not have an established trust relationship, or when the payee requires a guaranteed form of payment. Money orders can be purchased from financial institutions, such as banks and credit unions, as well as from retail stores, post offices, and other authorized providers. The purchaser pays the face value of the money order plus a small service fee. The money order includes the name of the payee, the amount to be paid, the payer's information, and a unique serial number for tracking purposes. To complete a transaction using a money order, the purchaser must fill in the payee's name, sign the money order, and then deliver or mail it to the recipient. The recipient can then cash or deposit the money order at their bank or a designated cashing location, such as a post office or check cashing service. Some advantages of using money orders include security. Money orders are less risky than carrying large amounts of cash and more secure than personal checks, as they cannot bounce due to insufficient funds. Anonymity. Money orders do not reveal the purchaser's bank account information to the recipient, offering a degree of privacy. Wide acceptance. Many businesses and individuals accept money orders as a trusted form of payment, especially for transactions with unknown parties. Limited fraud risk. Money orders include security features, such as watermarks and unique serial numbers, that make them more difficult to counterfeit or alter than personal checks. However, money orders also have fees. Purchasing a money order usually involves a service fee, which can vary depending on the provider. Limited amount. Money orders typically have a maximum limit, often around $1,000 in the US, which may not be suitable for large transactions. Inconvenience. Purchasing a money order requires visiting an authorized provider and filling out the necessary information, which can be less convenient than using electronic payment methods. Money orders can be useful in various scenarios where a secure and trusted form of payment is required. Some common situations where money orders might be used include paying rent. Landlords may require tenants to pay rent using a money order to ensure they receive a guaranteed form of payment that won't bounce like a personal check. Sending money internationally. Money orders can be a convenient way to send money to friends or family members in another country, particularly when the recipient doesn't have access to electronic payment methods or has limited banking options. Purchasing from an individual seller. When buying items from an individual seller, such as via online classifieds or a garage sale, using a money order can provide both parties with a secure and trusted form of payment. Making a payment without a bank account. For individuals who do not have a bank account or cannot use personal checks or credit/debit cards, money orders offer a widely accepted alternative for making payments. Protecting personal information. Money orders allow individuals to make payments without revealing their bank account information to the payee, providing a degree of privacy and reducing the risk of identity theft. Payments to government agencies. Some government agencies or institutions may require payments to be made using a money order, as it is a secure and traceable form of payment. Paying bills when a personal check is not accepted. If a service provider or utility company does not accept personal checks or electronic payments, a money order can be used to make the payment securely. Sending money to someone in a correctional facility. Many correctional facilities require money to be sent to inmates using money orders, as they are a secure, trackable, and easily processed form of payment. In these scenarios, money orders offer a secure, widely accepted, and easy-to-use alternative to cash, personal checks, or electronic payment methods. However, it's essential to consider the fees and potential inconvenience associated with purchasing and using money orders, as well as the availability of other payment options. Both money orders and bank checks, also known as cashier's checks or official checks, are secure forms of payment, but they have different features and uses. Here are the pros and cons of each. Money order. Pros. Accessibility. Money orders can be purchased from a variety of locations, including banks, post offices, and retail stores, making them accessible to people without bank accounts. Privacy. Money orders do not reveal the purchaser's bank account information, offering a degree of privacy in transactions. Wide acceptance, many businesses and individuals accept money orders as a secure and trusted form of payment. Security, money orders include security features, such as watermarks and unique serial numbers, making them difficult to counterfeit or alter. No need for a bank account, money orders can be purchased and cashed by people who do not have a bank account, making them an accessible payment option for those with limited banking options. Cons. Fees. Purchasing a money order typically involves a service fee, which can vary depending on the provider. Limited amount. Money orders usually have a maximum limit, often around $1,000 in the US, making them unsuitable for large transactions. Inconvenience. Purchasing a money order requires visiting an authorized provider and filling out the necessary information, which can be less convenient than other payment methods. Bank check, cashier's check. Pros. Large amounts. Bank checks can be issued for larger amounts than money orders, making them suitable for high-value transactions, such as down payments or large purchases. Guaranteed funds. Since a bank check is issued and backed by a financial institution, the funds are guaranteed, reducing the risk of bounced checks or insufficient funds. Widely accepted. Bank checks are generally accepted as a secure and reliable form of payment, especially for large transactions. Security features. Like money orders, bank checks include security features that make them difficult to counterfeit or alter. Cons. Availability. Bank checks are typically only available to customers with a bank account, making them less accessible for those without banking options. Fees. Purchasing a bank check often involves a higher fee than money orders, especially when issued by a financial institution. Limited locations. Bank checks must be purchased from a financial institution, such as a bank or credit union, making them less convenient to obtain than money orders. Less privacy. A bank check may reveal the purchaser's bank account information, offering less privacy than a money order. When deciding between a money order and a bank check, consider factors such as the transaction amount, accessibility, fees, and the level of security and privacy required. Each payment method has its advantages and disadvantages, and the best choice will depend on the specific circumstances and requirements of the transaction.